Hello and welcome to the Wisconsin Lieutenant Governor's Small Business Academy. This hour's session is ways to access capital for your business. What options do you have? Just a quick reminder before we launch that we will have a Q&A at the end of this session. You are free to enter questions into GoToWebinar at any time during the session. Now, I would like to turn over the session to our moderator, Joseph Davis Sr., Construction Business Group. Joe, take it away, please.
Well, good morning. I'm Joseph Davis Sr., Construction Business Group's DBE Development Director. And thank you to all of the attendees present here at the Lieutenant Governor's Small Business Academy. I'm excited to moderate today's virtual session, Ways to Access Capital for Your Business. What options do you have? And a special thank you to our panelists who I will introduce individually as they bring tremendous insights to the session. But before we get started, I would like to thank Lieutenant Governor Sarah Rodriguez for her commitment to the Small Business Academy and to the state of Wisconsin small businesses. WEDC Secretary and CEO Missy Hughes for her transformative thinking. U.S. Bank's Vice President and Small Business Specialist Sales Manager Rachel Smith for her commitment to the partnership she has established with CBG and the DBE contractors we work with in the road building industry. And finally, WPI for their technical support and coordination of this session. So let's get started. First, I would like to introduce Mikai Brown, Assistant Vice President and Business Access Advisor, U.S. Bank. Mikai is a Chicago native and a graduate of DePaul University and the Sandler Sales Institute. With significant experience in sales and marketing and media, Mikai's mission is to help small businesses and mid-sized businesses achieve success in sales and marketing. In addition, Mikai's passion for learning has led her to facilitate a weekly e-course targeted to business owners and professionals across the globe. This course covers business architect, sales, marketing, and operations. Please let the Small Business Academy welcome Mikai Brown. Mikai, it's yours.
Oh, I wasn't unmuted. I guess I will take the technical difficulties out the way for the entire panel. Good morning. I am very excited to be here and represent U.S. Bank on behalf of our Access Commitment Program. Access Commitment is part of our $100 billion financial commitment to the community. It is the largest financial commitment to the community in financial history to date. There are 4 pillars to that commitment: access home, access wealth, access business, and then the U.S. Bank Access Fund. And so you're probably wondering what that means. So I fall under access business, and my job is to ensure that minority business owners have access to all of the resources that they need to thrive and grow. U.S. Bank is here to ensure that business owners understand that there is a gap with access to resources, connections, capital, and community. And my job is to ensure that you have access to those resources inside and outside of the bank for your business to thrive and grow. And for example, when you come into the bank, and let's say there may be a credit challenge when you are trying to work with your banker to get access to capital. We have resources that sit inside of our branches through Operation Hope to help you get credit worthy, to build your credit up so that you can become bankable. Or let's say, for instance, there may be some other challenges where we can't have a relationship inside of the bank. My job is to ensure that I connect you with our CDFI partners to get you those relationships so that you can get funding inside of the bank. Or let's say, for instance, you desire a supplier diversity relationship. We have programs inside of the bank that will pay for you to get those diverse supplier relationships and certifications. And so my job is to make those handheld connections to pass those relationships off to ensure that your business can thrive and grow. So we have programs in place to make sure that your business has a 360 approach for success. And that is all a part of our US Bank Access commitment. So we are here to make sure that you can thrive and grow, and that's what we're here for. So I'm excited to work with you, and don't hesitate to reach out when you need help.
Well, thanks, Mika. You know, I will always say this too. Mika has become my ringer when we go out and play golf and golf outings also. So looking forward to getting out there as soon as when we get a chance, okay?
Awesome. I'm excited about that. I got a new golf bag too, so I'm pumped to wear it on the course. I think the gear is a lot more important than your game. So I'm all geared up.
I'm ready for you, girl. Next up, and thank you once again, Mika. Next up, it's Joe Kremer, the director, Tech Council, Investor Networks, Wisconsin Technology Council. Joe is the director of the Wisconsin Technology Council's Investor Network, which focuses on increasing early stage capital for Wisconsin's entrepreneurs. He has more than 25 years of experience launching businesses, commercializing products, and creating entrepreneurial organizations. But you know, if Joe has 25 years in experience, that means that he might have started when he was like 14. But anyway, please let the Small Business Academy welcome Joe. Hey, Joe, take it over.
Hi, Joe. Thanks, Joe. And thanks, Mika. My golf game has suddenly gotten a lot better, apparently, than it was last year. So without even trying. So thank you, everyone, for being here to learn about how to build your own business. As mentioned, I'm Joe Kremer, director of the Wisconsin Technology Council's Investor Networks. And the Tech Council is a nonpartisan nonprofit advisor to the governor and legislature on the high-tech economy. And my role at the Tech Council Investor Networks is to increase early stage capital for entrepreneurs in Wisconsin. And these type of startups that we are trying to help are high growth companies, and they require equity funding, meaning that investors buy effectively a part of the business for a cash infusion. And that cash infusion can be tens of thousands, hundreds of thousands, or millions of dollars. And to help those types of entrepreneurs access these types of investors, we have a number of programs throughout the year that can help entrepreneurs. Could we go to the next slide, please? So we begin the year, if you could go on to one more advance. Thanks. We opened the year with the Governor's Business Plan Contest. And this is something where we're looking for entrepreneurs who have just an idea. They haven't really raised much funding, hardly any equity funding. And so it's really sort of the very early stage companies that come into this contest. It's free to enter. At the end of the year, we disperse about $100,000 worth of prizes. And the first entry is just 250 words on your idea. And from there, where things start getting interesting for those companies that move out of phase one, about 50 companies, we start advertising and start putting their names out into the press. And then they also receive some mentoring. Could you advance the slide, please? So the contest culminates at our Entrepreneurs Conference. And this is this coming June in Milwaukee. It's the first week in June, Wednesday and Thursday. And this is where we have our finalists from the business plan contest present their business plan in front of an audience, including judges and investors. And there's a lot of networking events that occur at the Entrepreneurs Conference. So even if you're not involved in the business plan contest, the Entrepreneurs Conference is a great place to learn how to build your business, how to attract investors, and really, probably the biggest thing is to network around, because that is such a vital component. Could you advance the next slide, please? And then in March, what we have done, and just about 8 weeks ago, we organize a meeting where we bring a number of potential strategic large partners that are interested in meeting up with new emerging companies that might have a technology that they could form a strategic partnership around. This year, we had almost 200 meetings between all of these companies. And once again, we had great networking at this event and also some really good panel discussions. So again, we're going to be seeing this networking happen throughout as we go to the next slide, please. Because then at the end of the year, we have an opportunity for about 40 companies to directly pitch investors and an audience at our Wisconsin Early Stage Symposium. And this is a great opportunity for companies that have moved through the channels, have really built up their business plan and are looking for a significant amount of money, you know, $250,000 at the lowest, $1 million, $2 million is probably more typical. And again, there's a lot of great networking at this event. Could you go to the next slide? And then we also offer, I offer one-on-one consulting on companies that are looking to raise equity investing. And we'll talk about your company, you know, what type of money you are raising, your industry, what your strategy is, and we can talk about which investors in Wisconsin that really fit the mold for you. And then finally, if you could advance to this next slide. Overall, the Tech Council has a number of programs called the Tech Council Innovation Lunches that occur around 16 times around the state. And again, this is also great networking for entrepreneurs. So visit our website to see those events. Could you go on to the next slide? And this is one piece of information that is just readily available on our website. It's a list of all of the early stage investors in Wisconsin. You know, the amazing thing as I look at this map, 20 years ago, there were 6 entities. Now there's over 50. So Wisconsin has made great leaps and bounds in the early stage capital market. We still need to do more, but if anyone is looking to raise equity, please reach out to me. So thank you very much.
Thanks. Thank you, Joe. Appreciate the information that you provided for us. And I can tell you that, you know, the Tech Council is very well respected here in Wisconsin and throughout the country. And so the hard work that you've been doing over the years, especially in our largest urban area, which is Milwaukee, is very much appreciated. And we can see the tremendous amount of growth that's happening with that leadership. So once again, thank you very much. Our next panelist that we actually have, I'm gonna go off script a little bit. Wendy is probably one of the most gracious persons, but are very aggressive on making sure that the potential of every entrepreneur is met. I've worked with Wendy in my previous way of life, and I can tell you that she is sincere, but she has a lot of expectations with those clients that she works with. And you know, from my perspective, if I was in the dogfight, I definitely would want Wendy right there with me, because she's gonna make sure we get through it. She becomes successful, and most importantly, she does it because the love of what she's done for so many years. She's the Chief Visionary Officer for WIBIC, and it is my pleasure to introduce Wendy Bauman. Wendy, the floor is yours.
Thank you. Thank you, Joe. And for Joe and the other Joe and Mackay, I want to share, please don't pack up the golf courses, because I cross-country ski on them in the wintertime. Okay, I don't chase a little ball around like you do in the summertime. But thank you very much. I appreciate your presentation. It's really good working with you and working with you in the future. So I have way too many slides here, so let's gonna whirl through them. But this is a slide that really talks about WIBIC's perspective and basically sort of a message to banks and other organizations that might have to turn down somebody who's looking for capital. And we try to share the slogan, don't say no, say WIBIC. Let's see if we can get this deal done. So next slide. So our mission and our impact, we'll talk about that. Next slide. Of course, all of these photos are beautiful entrepreneurs we've had the opportunity of working with over the past 37 years of WIBIC's history. So we're a statewide innovative economic development corporation, soon to open our 6th office, which will be in Hayward, North Central. We care about anybody who wants to start or grow a business, but specifically focus on women, people of color, lower wealth individuals, veterans, and military connected families. Next slide. Again, we've been around since 1987. A lot of partnerships are focused. Again, some great businesses here. We've got the opportunity from plumbers to dog trainers to retail to small manufacturing types of businesses. Next slide. So really, what do? We provide quality business and financial training. We'll not talk about that much in this session because this is really on financing. Micro and small business loans, Along with those loans, we provide significant one-on-one support to loan clients, the loan portfolio, and have some programs around financial wellness and support their financial literacy. Next slide. So in terms of impact on the clients we serve, this is 2023 statistics. You know, we really, when we say we have a focus and care about different individuals, we really do. So 92% of our clients in Greater Milwaukee are people of color, 66% statewide. About 70% of our clients are women, and about 70% are low and moderate income. Next slide. Through the years, since '87, about 75,000 individuals we've had the opportunity of serving. Our loan portfolio actually right now is about 120 million. That's with an average loan size of about 35,000. Businesses that we feel we help really start, also strengthen and or expand or accelerate, about 10,500, and then jobs created and retained. Next slide. Again, cumulative, you can see a lot of growth in that loan portfolio for the past 3 years. And I think if COVID and the economic crisis wouldn't have hit, we'd probably be already peaking over 30 million. But again, a lot of shuffle happens with financing and financials during that time. A little bit on our funding, a little bit on our financial awareness program. Not going to talk about that too much, but you will see on that circle slide that about 60% of our clients are existing businesses and about 41% are startups. This will move back to reverse. Again, during that whole economic crisis, WIBIC really helped keep a lot of businesses alive and surviving, but we really are very much in that startup mode. Startup a little bit different than the Tech Council, but startup for those micro and small businesses. Next slide. So again, our lending programs. Next slide. 2023 impact, we approved about 10 million in loans and closed about 10 million. It was always a little bit different when you come off the year. The current portfolio right now is about 25, 26 million, 530 distinct loan clients, but about 750 loans due to some clients having a couple loans. Next slide. And again, sometimes microcredit and micro businesses, you think these are only childcare businesses or only retail, they really run the gamut. So very much like the small business sector, we're lending to construction companies, we're lending to trucking companies, professional services, and the like. Next slide. So lending, our credits go from 1,000 to 350,000. Again, average loan size about 32,000. We're at fixed rates. We generally go out 6 years, but can go out 10 years depending. Most of our loans turn in 4 years, so a lot of these small loans being put on our books and a lot of them rebounding out to financial institutions like U.S. Bank and other partners, or being able to pay off. The use of our funds is quite different than, again, a bank. You sort of think of a bank as this kind of box and WIBIC box like this. So again, inventory, working capital, startup costs, equipment, many things, again, that banks often a little bit cringe at because they don't have those hard assets. And we'll do that lending. And we'll also lend in second position to financial institutions to still get that business started and growing the capital that they need. Our application is also in English and in Spanish. Next slide. I want to mention Kiva. We are a strong Kiva partner. Think of Kiva as crowdsourcing, but only for small businesses. So the crowdsourcing for small businesses through the Kiva platform is from $1,000 to $15,000. Their sweet spot is about $7,500. These are 0% crowdsourced loans. So we, as the citizens and members of the world, can go onto the Kiva site right now and look at a Wisconsin business and can, with our PayPal account, actually invest in that business at 0% with a minimum of $25. So again, a great piece to start that very small micro business when you need thousands of dollars. Next slide. And just impact with Kiva in 2023, about 82 loans in Wisconsin, 750,000 some. You can really see again working with women, people of color, lower income. It's a really great crowdsourcing tool I have you look at. We have WIBIC staff that are attached to that to help those micro businesses get out there and sort of crowdsource for those loans. Next slide. And then with that, thank you. This is a picture of the WIBIC team last summer in front of our good state capitol where we had a gathering. Thank you, Joe.
And that just pretty much explains the reason why WIBIC's been around for a while, right? I mean, the diversity and how you get the money out to folks, and some of the questions that we'll ask, we'll kind of expound upon some of those things because it's important for potential clients to know exactly why you do what you do in order for you to get the money out the door. Sometimes businesses are in distress and they figure that you can just uh, go through the process without making sure that you check the boxes to the critical things that you need in order for default not to occur. But we'll get into that discussion as we move down the road. David Goins. Now, this guy here, I had an opportunity to really focus on Native American lending, and what's happening in northern Wisconsin is I would say it's not an anomaly. It's just finally starting to occur. So I'd like to introduce David. He's Chief Operating Officer of the Wisconsin Native Loan Fund. David has worked with the Wisconsin Native Loan Fund since 2011 as a consultant, and he has been the Chief Operating Officer for the past 5 years. Prior to 2011, David spent 9 years as the IT director for full service broker dealer and bond company, where he has helped create an IRA holding company and many of the systems used by the company. His advice is regularly sought by those in the native CDFI industry. And please let the Small Business Academy welcome David Goins. Miigwech.
Thank you, thank you, Joseph. WNLF, or Wisconsin Native Loan Fund, is a CDFI, so that's a community development financial institution. As a group, our mission is to expand economic opportunity for underserved people and communities by supporting growth and capacity of a national network of community development lenders, investors, and financial service providers. What ultimately this means is that we do lending and financial education, and we can do it in ways that some of your traditional lenders cannot. We are regulated and we are monitored by the Treasury Department, but we have more flexibility in some of our practices than banks do. We can also do things like when we do have a client who falls behind, we have more flexibility to work with that client and help them not lose their company or not lose their assets. As long as, like for us, as long as they're making payments, they're covering at least their interest. We try not to foreclose on loans, and so we have a little bit more flexibility there. But ultimately, our mission is to get people bankable. It is to get people into the traditional systems. So it's not to keep a client forever. It's to pass them on to traditional lending and get them to where they can survive and function in your normal business or home loan environments. Each CDFI kind of has their own unique premise, their own template that they run off of. We are a native CDFI. We are one of actually 5 in the state of Wisconsin. One of them is a bank up in Green Bay. The other 4 of us are part of a group called WEDIC. If you want to go to the next slide, please. WEDIC is the Wisconsin Indigenous Economic Development Corp. So it's made up of the 4 native CDFIs that are not depositories. Last year, if you want to go to the next slide. Last year we did, let's see, is there more to that slide? No, I guess not. Last year we did over 3.5, almost 3.6 million in business lending alone. Total lending, we did over $6.5 million in lending as a group. So our impact is pretty substantial in the state. Again, each CDFI, so we're native CDFIs, but each CDFI has their own different focus and their own target area. Some are in cities and work on food deserts. Some work with people of different colors in different communities. Some work on more rural areas. So each CDFI kind of has its own little niche, so to speak. Like I said, we do lending and we do TA, and TA is a big part of our organization system. We don't want to put somebody in a loan they can't afford. We don't want to put somebody in a loan that they're not in a position to handle. They don't have the education, they don't have the means to, or the understanding on what that loan is and how that loan works. Like I said, we're a lot more flexible on our loans than a lot of institutions are. We look at several factors and we determine our lending. The primary, I guess, red line number that we use is like our debt to income ratio. We do not want to put anybody into a loan that they're not going to be successful at, that they can't afford. So that's kind of our you know, like I said, our red line where we don't go above or below that. But we can work with low credit scores. We can work with just about anything else. We do look at payment histories. We also look at longevity for jobs, employment, income, and those kind of things. But most of that, again, is just to make sure that each borrower is a successful borrower. Our typical loans run between $1,000 and $150,000. Our rates are competitive with most banks at the moment. Usually we're a couple points above, but with COVID and some of our funding opportunities we've had, we've been able to be even more competitive with banks in that traditional market. So I guess that's kind of Winliff at
Well, David, thanks for speaking of the partnership in the CDFI community in northern Wisconsin. I know that when it was launched, a lot of people became very excited about the opportunity and also getting the money out the door for those small and medium-sized business up in Indian country. So thanks. And if you want to expound upon it a little bit more, I think I got a question that I'm going to shoot you a softball so you can expound a little bit more on it, okay?
Sure.
So if we can get Joe back on the camera, and what we want to do is at this particular time, we want to really accept some questions from the audience. So you can place them in the chat box, and Michael is monitoring the chat box, and we'll go from there. But I want to start it off with a question that I've always had it really was important to me to make sure that small and medium-sized businesses understood this whole philosophy, and that is, and we all know this is every deal is not a good deal. So with that in mind, what are some of the ABCs to recognizing a good deal when a small business owner is looking for affordable capital for their business? I think we'll start this one off with Wendy.
Sure. You know, the basic things that we look at is we do like to see a business plan. It doesn't have to be 25 pages long, but it has to be something that entrepreneur and business owner, the startup or existing, looks at who, what, when, where, why. There's sort of the story part to the business plan and then the financial part to the business plan. And they have to make sense. If this is a startup retail, most likely you're not going to move to $1 million in sales with your projections that first year unless something very unique is happening there. So really getting to us asking the hard questions so that they can meet the success and they can prove to us, if you will, too, that this is a viable business idea. And they have the capacity to carry out that viable business idea to run a successful business for themselves and also create jobs. So, you know, it's really basic. What is the plan for this business? What is the goal for this business? And how do you really see your financing it? Obviously, it's an existing business. We can look at past financials to find that business, or if they're looking for money to grow. But if it's that startup business, we really need a sense of what's the plan. We look at that. We look and really query over those financial statements and projections, as well as their marketing plan. Those are probably the two.
And Wendy, since you're statewide, you know, if you had to put a tangible percentage of it on it when they first walk through the door, um, how many clients would be prepared for exactly what you talked about? And with the technical assistance that Wibby works with, do you work with them to scale all of that information that you talked about so that they would be bankable?
Right, we do. I would say that walking in the door, probably 25% are ready to go and just need a little fine tuning. Another 50% need a little bit. Good, you got something here, I need more in the marketing. Let's look at these financials. Let's do worst case scenario. Let's do what really you're probably expecting, and let's do really a bright sky with it. So either that marketing piece or financial piece needs tweaking, and then 25% that walk in the door needs some more time. It's not right yet, hasn't been thought through, going to need to work through some things, and hence the other half of Wibby's house is the training. 5,273 unduplicated clients went through our training last year. So how to start that business, how to run a business, how to marketing on a cash flow, on and on and on, all those courses, mornings, evenings, online, in person, on ground, and hybrid, to really get them ready. So sometimes they'll work with us for a year before they then really actually apply for a loan and are loan ready.
Yeah. Now, guys, you know, since I'm moderating this panel, I don't want to get in trouble. So, ladies, go first. Okay, we'll come back to you guys. So, Mika, I know that you have the market in Illinois and in Wisconsin, and so you're seeing a lot of businesses. Some of them are ready to walk through the door, and some of them takes a lot of hand holding. What do you say about the good deal and how to recognize a good deal, and what do you want to offer to the attendees?
You know, you hear this a lot. Every business is unique, right? And each and every business owner here is not the same. So you have your own funds, everyone has their own funds, everyone has their own debts, and you have your own plans for the future and much more. And this all impacts your approach to securing funds. And so what I want to do is I want to encourage everyone to do these 4 things. 1, be prepared. So you're going to be asked for documentation, very similar to what Wendy was saying. And so you're going to be asked for documentation of everything related to your finances in your business. And this is going to impact you greatly on getting access to capital to a traditional bank and a CDFI. A CDFI is particularly going to ask you a whole lot more documentation than a bank is. And I need you to be honest with yourself, not only about your finances, but also about what you're looking for to secure affordable capital, and consider what is a priority for you. And I'm not saying you can't have it all, like for instance, a banker who's always available, the low interest rate in your area, the amount of funds that make sense to you, and much more, but it's not always going to work out that way. So come in, you know, with the best intentions, in, you know, with the most positive and uplifted attitude, you know, but just know that it may not be exactly what you want, but there is always going to be a solution. And the solution may be 3 months from now. So just manage your expectations that it may not work out the way you want to when you walk in that door. And you may have to talk to 4 different people to get your solution, but be patient, because there are, like, the grass is greener on the other side. Persistence is the key. So you may go in thinking that you need 1 product and the solution may be spread across 3 different products. You may think that you need, you know, a secure loan when you may actually need a line of credit and equipment finance. So your job is to be a business owner and just know the expert is the banker or your CDFI partner. Be the business person and let the experts give you the advice. That is what I will leave you with.
Well, they said you're always supposed to have 2 things that are critical. Matter of fact, it's probably 3 things, and that is a banker, somebody who knows insurance, and a CPA that's going to watch your money. So I think you touched on the whole thing as far as the banking is concerned. David, so Indian country, you know, there's a lot of great stuff that's going up there. You know, Oneida is doing some good stuff. Potawatomi, as you know, not only here in Milwaukee, but up in Forest County. And there's a lot of investment flowing. How do you work with those young entrepreneurs? Because there are a lot of young entrepreneurs in certain non-traditional areas that want to scale up their business. And how do you take a look at good deals, bad deals, and how do you work with your clients?
Well, we work with members of all 11 the tribes, federally recognized tribes in the state of Wisconsin, but we also will work with any tribal member from any tribe as long as they are a Wisconsin resident.
Mhm.
And then we also work with documented descendants of the 11 Wisconsin tribes. So we do have a big market up here. And we are seeing more and more people trying to get into small businesses. Some of them are some side hustles and that kind of thing, trying to develop something to get it rolling. And, you know, so there'll be smaller dollar loans. And I'd say the biggest thing for us and for our clients to watch out for, and I think Mika kind of touched on this, is don't get in over your head in a way. You know, don't go for that big monster loan to build everything at once. Sometimes you need a line of credit, like Mika was saying. Sometimes you need different loan products. And like for CDFI, she's perfectly correct that it is more steps than going to a lender. We are more flexible. We can do things that other lenders can't, but we are going to ask for more things. And we do see clients that get frustrated with that. But like she said, there's a light at the end of the tunnel. You know, one of the benefits with working with WEDIC is that not all the loans may be perfect for Winliff. So we refer things over to First American Corp that's out of Milwaukee there. They're an SBA lender. They can do things we can't do. There's a group, First Nations Financial Corp, or FNCF. They're out of the Ho-Chunk tribe, you know, and then Woodland that's up in Menominee County. We all have our own little specialties and our own niches. And so we try to partner the right lender with the right client. And then we also partner with US Bank and some other organizations to try to, if it's somebody comes to us that doesn't need us, then we try to move them into the market that they should be in. So I guess the other thing I'd say is look out for this fine print. You know, if you're somebody that's looking for a loan, look out for that caveat. If it's a balloon payment that's in there, know that balloon payment's in there. It may be good, it may be bad, but know that that's there. And in 3 years, you may have a big payment you're not expecting. So look for those little details that are in the loans. Can't hear you, Joe.
Thanks for holding me accountable. But hey, I'm looking forward to coming up there and eating some of those Indian tacos. It put probably about 5 more pounds on me, man. So that's the reason why I have to go out and exercise all of the time. So good stuff. And Joe, now your industry is the flavor of the day. Everybody's talking about tech, right? And rightfully so. I mean, we see internationally these chip makers and things of that nature. So people who have went to college, startup companies, you know, kids coming out of college, and also the ones that are seasoned are interested in coming in and getting capital to start up their business. Come on and bring it to us, man, what they should watch out for as far as a good deal, bad deal, and things of that nature. Because honestly, your industry is probably $1 trillion industry currently right now.
It is huge, and that's why people go after it, because they want the big bucks. And there's a lot of risk, so we got to keep in mind that entrepreneurs that enter sort of my domain, 80% of them most likely will fail. So people are taking big swings, and that makes it kind of exciting. But one of the most important things I think that I've seen as entrepreneurs start approaching investors is they need to really know their market, and they really need to know how their product or service fits into the market, and why will people spend money on it. And that is probably one of the biggest issues we have seen. And I know WIBIC does a great job at teaching that, others do too. But that's one message that I think would be helpful to constantly get out to all entrepreneurs, no matter where you are. Really know what are you selling and to whom, and really prove that they'll pay for it.
So great answers, and I'm hoping that the attendees have written down some of these things, whether it's the 4 principles or being prepared, as Wendy talked about, as David talked about, different size loans for different type of businesses, and one of the things we definitely talked about is cultural competence when you go into a bank and you start dealing directly with a bank. But I want to ask Mike, is there any questions currently right now that's in the chat that any attendees would like to ask before we move on to the next question?
Thanks for checking, Joe. At this time, we do not have any audience questions. So for all of you in the audience, that is a strong encouragement. Your question may reach the top of the pile.
Yeah, let's get engaged on this one here because, as Wisconsin grows, the growth actually comes from small and medium-sized businesses. So if you have that question, you have these experts that are on the line that have been significantly targeted to actually do this panel so that you can be prepared if you need access to capital. But I'll ask the next question. And so let's take a deep dive into this issue of cash flow, right? Since all of you have expertise in the financials of a business. Share with the audience why cash flow and income balance statements analysis are important and why businesses, whatever size, should use this accounting method to request the necessary capital desired. And I know sometimes people say, look, it's really not necessary for me, but it really protects your business and it actually puts you in a certain space and time on assets and liabilities. So we're going to do the reverse thing. And Joe, you're up on this one here.
All right, this actually brings back an interesting memory for me when I suddenly realized how important cash flows are to a business. So it was one of my first startups, and at the end of every month, I was running out of cash to make payroll. And I couldn't figure out what the heck was going on because we were receiving money from our investors on a monthly basis, but I would keep running out of money. And suddenly I realized I was looking at my cash flow from a monthly standpoint and not a weekly. And when I started looking at it weekly, it was just a whole different ballgame. So it suddenly became clear to me, not just having, like this balance sheet that's showing that I have this money coming in and all these other things, but what is the real hard, cold cash doing and where is it? And do I have enough of it right now to meet my needs? So this is a great question. It's something that everyone, and it took me, it caused us some problems because I had to learn this the hard way. So glad to share that.
Awesome, man. I kind of figured you had one of those stories somewhere in you.
I'm sure I have more.
David?
Yeah. So like I said earlier, one of our biggest criteria is knowing that somebody can afford the loan. We don't want to put somebody in one they can't afford. And, we're willing, we are a risky lender. We are willing to lend where others won't. And so if there is, even if you're on the brink or right, if you can show the promise of it, then we're more likely to invest, even if you're not in the black just yet. And so that's what you need to show. You need to be able to show that history. One of the other things we run into as our organization, which probably doesn't apply to some of the others, but people sometimes think we're a program and they try to hide money from us. They try to lower their income levels thinking, because that's what they've been educated to do, is you want to show less money so you qualify. It's kind of the opposite with us. We're expecting you to pay it back. So, the more you can show those numbers, you really need to have true financials so we can tell whether you can afford the loan or you can't, because we don't want you to fail. We want you to be successful.
Awesome. Mikai?
It's hard to come after these two gentlemen about this, but it's really important to know what you can afford. And I challenge everyone on this call to add up all of your monthly debts, every single thing that you pay out every single month, and take it globally, because especially for small business owners, I'm sure you're all commingling funds, which you shouldn't be commingling funds, but I'm sure your little payments are coming out of your business accounts, the Fashion Novas or the Hulus of the world, because I see it all the time. So take up all your monthly debts and divide it by your gross monthly income. And if it's over 50%, and literally it should probably be 30, like you have a problem. So you need to sit down with a financial expert and figure out how you can lower these numbers and where you can, cut down on costs. So let's start with that number, because that's where your loan officer is going to look at. They're going to look at your DTI, and there also is a number, your debt service coverage ratio, that they're also going to look at as well. But start with your DTI, like that's a simple math. Everything that you owe divided by what's coming in gross, not net.
All right, that's straightforward. Okay.
And don't commingle funds. So if you're commingling, separate it. Okay, get an accountant. Don't put Hulu underneath your business.
I think she was trying to make a point there, a very strong point. Don't commingle. Okay. Wendy?
Yeah, I would just add on to saying it in a different way from the way David shared. So it's that cash is blood. Can't live without it, can't run a business without it. So cash flow is very important. We look probably every single solitary loan committee. Well, cash flow, but we can see a cash flow. So it's sort of a selling point for almost a cash flow lender. So cash flow is really, really key. We like to see some skin in the game, sweat equity or financial equity from business owner. We like to see the savings, and that just in case that they still being withdrawn the savings that they have in this bank account, that account. And then we do also, because we're dealing with so many startups, small businesses, and sometimes that personal household is fragile, that startup businesses could be fragile. So we also look at that global cash flow too of the family unit. Or things like that.
I know what you're going through, Wendy, because it does that to me too. And all of a sudden you got to look like you're doing the Macarena or something like that.
Yeah.
So, yeah. So, real quick, because we actually have some questions out of the chat box, and I want to get to those before we wrap up before the hour. But Baker Tilly, we work with clients that are coming into the construction industry, subcontractors that are in heavy highway industry. Baker Tilly is one of our partners. They've established a draft spreadsheet that if attendees are interested in, the construction business group and myself out of my office would be able to do a proper introduction to you so that you can use that tool so that you don't commingle funds, okay? So, Michael, I understand that there are some questions in there. We probably won't be able to get to all of them, but why don't you ask the first question?
Okay, question number 1. Where do I find investors, and what percentage of business should I give up?
Great. Yeah, that's a great question. And actually, I was just thinking about that, and I was hoping for this question because this is really sort of a quandary for the entrepreneur. And I've been in this position where raising money from investors, how much of your business, what percentage of your business do you want to give up to them for their money? The earlier in your business, you're going to give up more versus later in the business because, as you grow, you drive out risk and you prove that you can do what you can do. So then you don't have to give up as much. There's just one saying I want to impart on everyone that a mentor of mine would say is, would you want a large piece of a small pie or a small piece of a big pie? And when it comes to equity investing, typically, you might be giving up between 20 to 50% of your business for your first investment round. But if that gets you to where you need to be, and if you're going to grow a multi-million, $100 million company, it all works out. So there's no real rule of thumb, but just be aware that most likely if you do engage investors, you might be shocked at the amount, but it's really not truly as bad as it appears.
Okay, anybody else want to answer that question? No, okay, Joe, I'm sorry, that's me. Michael, is there another question?
See what you meant. Okay, question number 2. If I don't have any revenue or pre-revenue, can I still get a loan?
To start off, you're really looking, we're lending on projections. We're lending on your plan and your projections and your marketing plan. So that piece, if the business right now is existing and doesn't show revenue, we would want to know what is the plan to really increase then that revenue, i.e. not just revenue, but profit. Turn the cost, charge more. Those would be my quick comments on understanding.
I'll do a little bit of follow-up from a traditional banking standpoint. If you don't have revenue, your credit score is going to play heavily in your credit worthiness and your experience in the field. So there are products from the SBA that you can get from a traditional lending institution. It's called SBA Express. It's an SBA Express loan, but the minimum credit score is pretty high. You have to be in the high mid 700s to get this loan. And then your experience in the field also plays a factor. So you can't say, I'm going to create ice and live in Hawaii and never have created ice. I mean, that's an extreme example. Or like, you can't be in construction and then be a cosmetologist. So like, it has to be in alignment. Or let's say you're buying a franchise that generates revenue. It'll be a whole lot easier to fund that project because that franchise has been in existence and it was generating revenue, and you can show business plans of history of success, and you're coming in with that existing credit score. Another way to get funding would be you start with a business credit card or something like that. There are other products that you can get from the bank within 6 months in business, but SBA Express would be the first way to go because they don't have a timeline. You can get a loan with being in business within a week, but other products in the bank, you have to be in business for 6 months.
All right, so David and Joe, we have about a minute. If you guys want to chime in on answering that particular question, and then we're going to wrap this session up.
Yeah, real quick. I guess part of it's going to be if you can kind of build on the others. If you have a reference, if you have like, if it's a franchise or you have something where you have somebody else that can provide you with numbers or an industry numbers that can kind of show a trend in that industry. The other is, what are you going to use the loans for? If it's going to be to buy assets like a building or something that can then be, can secure the asset, or if you have income from another source that you can use as a way to kind of guarantee the loan that you'll be able to pay the loan off even if the business fails or doesn't take off, can be factors with some of the alternate kind of funders.
All right, Joe, you got the last word?
Yeah, I guess just quickly, most investors that do equity investing don't expect there to be revenue coming into the company. Usually it's very aspirational plans that they make investments on, though I have seen a trend, and as the market gets tight, sometimes this happens, where investors can get a little bit more picky, and if they do see deals that have what they call recurring revenue streams, they do tend to like those. And I know that is a bit of a flavor right now, but that shouldn't cut anyone out who doesn't have revenue, because really this market is about investing in very risky high-tech startup, and it is not an assumption that there's revenue being received right now.
Well, we probably could have took another hour having some discussions, but it's important for us to really dip our toe in the water, specifically on behalf of the attendees, so that they know it's not as complex, but it's also about preparation. When you go see that banker, when you go see that particular financial consultant. So Wendy Bauman, Mikai Brown, David Goins, and Joe Cremen, I just want to thank you for actually coming on board and giving those folks who have attended this Small Business Academy's virtual session a little bit of being prepared when they come to see your organization. I wish I had an opportunity so that you can actually talk a little bit about your organization, but that is for another time. So thank you very much. And also we want to thank the Small Business Academy for allowing us to do this session. Take care.